All right, let's dive into something truly compelling today. We're taking a deep dive into Noble Corporation, PLE, ticker symbol NE. Now, you've sent us some fantastic analysis on this offshore drilling giant. And our mission today is really to cut through all the numbers and the market chatter. We want to give you, our listener and fellow investor, a clear, actionable understanding of what truly matters about Noble. Noble isn't just another company. They're a foundational player, providing essential offshore drilling services for oil and natural gas exploration and production globally. Think of them as the silent powerhouses enabling the world's energy supply, drilling deep beneath the ocean's surface. We've compiled insights from some comprehensive analyses to guide you through their business model, their financials, and, well, the ever shifting market they operate in. But here's the real story that matters for investors. The offshore drilling market has been on an absolute roller coaster, moving from deep troughs to significant peaks. Right now, recent trends show a dramatic and, dare I say, structural shift. So, what exactly does this mean for Noble? And more importantly, for your investment perspective? Let's unpack it.
Okay, yeah. Noble Corporation, they specialize in contract drilling. They primarily use what they call high-spec jackup rigs and drill ships. These are not your average rigs. They're engineered to operate in the most challenging deep and ultra-deep water environments. Their clientele, we're talking about the major international and national oil companies, essentially, the heavyweights of the global energy sector. Their competitive edge truly stems from their advanced technology and their rigorous safety protocols. And that's not just, marketing fluff. It translates to incredibly efficient operations, even in the toughest conditions. And critically, strategic acquisitions, especially that of Maersk Drilling. Well, that move not only boosted their sheer scale, but significantly cemented their market dominance. They've gone from a player to really a formidable force. What's truly fascinating here, and perhaps the most important lever for any investor to understand, is how exquisitely Noble's revenue is tied to just two core metrics. It's not just about total contracts, it's about the day rate, which is literally how much they charge per day for their rigs and the utilization rate. That just tells you how often those expensive rigs are actually out there working. And right now, both of those twin engines, are firing on all cylinders in a way we haven't seen in years, which is fantastic news for their top line.
So we've seen Noble's operational engine revving up with those high utilization rates and impressive day rates. But what does that truly translate to when we open up their books? Are we seeing that market recovery flow all the way down to their bottom line? Walk us through their latest financial snapshot.
Absolutely. When we look at their financials from recent public disclosures, the revenue shows a remarkably steady increase. This isn't accidental. It's a direct reflection of the recovering offshore drilling market and, well, the high demand for their specialized high-spec rigs. It's a clear signal that demand for their services is not just picking up, it's sustaining. Now, operating income and net income have historically been quite volatile in this industry. Think of it like a wild ride, right? Influenced heavily by market shifts and the massive depreciation of their multi-billion-dollar assets. However, what we're seeing recently is positive trend as the market solidifies its recovery. They seem laser-focused on boosting profitability through smart debt restructuring and highly efficient operations. For you, the investor, this keen focus on operational efficiency is a crucial sign of a well-managed company. Their cash flow, particularly operating cash flow, is generally positive. This is vital because in an industry that needs constant, massive investment, you're buying and maintaining floating cities, essentially. So positive cash flow means they can fund new investments like critical rig upgrades or pay down debt. And speaking of debt, it's a point worth dwelling on.
Okay. Debt, yeah, that's always a potential red flag in capital-intensive industries. Noble, like many in this sector, has a history with significant debt. How are they navigating that, and what does it tell us about their financial health today?
You hit the nail on the head. Historically, high debt was a major risk for companies in this sector, and Noble was no exception. It was a serious overhang. However, they've been incredibly proactive, diligently working to reduce their debt to far more manageable levels. This is a critical positive for their financial health, signaling a stronger, more resilient company than perhaps in previous cycles. For you, tracking these key financial metrics helps you understand not just how much money they're making, but how effectively they're steering a very capital-intensive ship. And importantly, managing those past liabilities to build a much stronger future. That's a powerful picture of their financial comeback. Now, digging deeper into how they actually earn that revenue, Noble's income primarily comes from two distinct types of rigs: drill ships and jackup rigs. What's the fundamental difference between these two, and why does that distinction truly matter for their bottom line and for us as investors?
Yeah, that's a great question to differentiate. Drill ships are your high-performance, mobile offshore drilling units. They're designed for ultra-deep, for deep-water oil and gas exploration. They operate in truly challenging, often pioneering environments. Because they demand such advanced technology and represent enormous investment, they command significantly higher day rates. Think of them as the Rolls-Royces of the drilling world. On the other hand, jackup rigs are self-elevating mobile platforms, typically deployed in shallower waters. They offer more operational flexibility and are quite versatile for various offshore conditions, though their day rates are generally lower than drill ships. Noble's revenue stability is very closely tied to the specific day rate and utilization rate for each project, with those longer contracts providing far more predictable income. And if we connect this to the bigger picture, their recent performance is showing some incredibly positive trends across these core drivers. The offshore drilling market is actually experiencing what looks like a structural recovery. And what we mean by structural is that it's not just a temporary bounce back from a downturn. It seems to be a shift driven by long-term fundamental changes. We're seeing increasing global oil and gas demand, a limited supply of new rigs coming online, and, the natural retirement and scrapping of older, less efficient equipment. This creates a supply-demand imbalance that, it favors Noble.
That sounds incredibly bullish, almost too good to be true for such a historically cyclical industry. So with this structural recovery, are we really seeing those day rates climb, and how high can they potentially go?
Absolutely. The scarcity, like I mentioned, means day rates are climbing steadily, especially for those highly specialized, high-spec rigs. This directly boosts Noble's revenue and, crucially, their profitability. Moreover, their rig utilization rates are exceptionally high, ensuring stable revenue generation. This is further bolstered by a noticeable increase in long-term contracts, which provides not just income, but predictable, multi-year income streams. And perhaps most tellingly, their backlog, representing future contracted work, is growing significantly, which offers strong visibility into future earnings. For an investor, that backlog is almost like getting a sneak peek into their future revenue stream.
Okay, beyond the operational picture and the big financial numbers, what are the specific investment metrics you, as an American investor, should be keeping an eye on for a company like Noble? What are the kind of telltale signs?
Right, for you, the investor, there are several key metrics. The PE, price-to-earnings ratio, is always a standard one. And as profitability improves, Noble's PE should become more rational. But be aware, past losses in this cyclical industry might make this less meaningful in certain periods, so always look at the trend over time. Another crucial one, especially for capital-intensive industries like drilling with their massive depreciation, is EV/EBITDA. That's enterprise value to earnings before interest, taxes, depreciation, and amortization. Think of EBITDA as giving you a clearer picture of the company's true operating performance before, the complexities of financing and large asset write-downs kick in. You'll definitely want to compare Noble's EBITDA to its competitors to see if it's trading at a discount or premium relative to its peers. The PSR, price-to-sales ratio, can also be really insightful, particularly for a company like Noble in a strong recovery phase. When earnings are still volatile but revenue is growing strongly, PSR gives you a clearer sense of how investors are valuing that core sales strength before the profit picture fully stabilizes. And given Noble's past debt challenges, monitoring their debt-to-equity ratio is paramount. A decreasing ratio signals improving financial health and a stronger balance sheet. Finally, tracking their return to profitability and EPS, earnings per share growth, is, as always, a fundamental barometer of their success. Now let's talk about shareholder returns, specifically dividends. Noble has a history of suspending or reducing dividends during downturns, which isn't uncommon for cyclical industries like this. However, with the current market recovery and their improving financials, there's a strong possibility they may reintroduce or even increase dividends as part of their shareholder return policy. For you, the prudent investor, always verify the latest official announcements for the most up-to-date information on this front. It's a potential catalyst, for renewed investor interest.
That potential dividend return is certainly something to watch. Okay, beyond those core metrics, what specific news and broader market dynamics have the power to really move Noble's stock price? The things that can make or break a day for investors.
Well, the most obvious and paramount factor is oil and natural gas prices. These are the lifeblood of their business. Higher prices encourage oil companies to invest more in exploration and production, which directly translates into more business and better contracts for Noble. It's a pretty direct correlation. Then you have offshore drilling day rates and utilization trends. These are the most direct indicators of Noble's profitability. So consistently rising rates and high utilization are unequivocally positive signals. Also, keep a very close eye on new contract signings and backlog changes. Long-term, high-margin contracts provide immense stability and directly boost the stock. Seeing their backlog grow is a fantastic indicator of future revenue visibility. We also need to consider their capital expenditure, CapEx plans. Large investments in new or upgraded rigs can signal long-term growth, but they might temporarily strain cash flow, so it's a trade-off to watch. Competitor developments in M&A activity, like recent mergers within the sector, can directly affect Noble's market position and pricing power. And of course, global economic growth and the overall energy demand outlook are crucial. Stronger economies generally mean higher energy demand, which is excellent for the drilling sector. And while it's a long-term strategic concern for fossil fuels, green energy policies and regulations are important to keep in perspective. In the short to medium term, energy security needs still very much drive demand for traditional sources, even as the world transitions. Beyond the headlines, understanding market sentiment is equally key. Energy sector sentiment can swing Noble stock significantly, as it's highly sensitive to overall perceptions of the oil and gas sector. Institutional investor activity, particularly from large players like BlackRock and Vanguard, can significantly influence stock prices. You want to monitor their buying and selling trends for clues on big money moves. Short interest is another important indicator. A high short interest implies that many investors are betting on a price decline. Conversely, a low or decreasing short interest is often seen as a positive. And the commodity futures market, specifically oil and gas futures prices, can often foreshadow market expectations for Noble stock, giving you a kind of leading indicator. Lastly, always pay attention to shareholder information, including major institutional holders, insider trading, and potential activist investor involvement for insights into the company's long-term stability and strategic direction.
No investment is truly without its risks, though. While Noble is clearly benefiting from strong market tailwinds right now, what are the inherent potential pitfalls investors should really be mindful of with this company?
You're absolutely right. A balanced view requires understanding the risks. Oil and natural gas price volatility remains the primary risk. A sustained drop in prices could lead to reduced exploration and production spending by Noble's clients, directly impacting their contracts, day rates, and rig utilization. This is the big one, right? It can quickly turn tailwinds into headwinds. A global economic slowdown is another significant risk, as a widespread downturn would naturally reduce overall energy demand. And we cannot ignore geopolitical risks. Conflicts in regions like the Middle East or the Russia-Ukraine war can cause unpredictable market volatility, potentially disrupting operations or even depressing long-term demand for energy. While not an immediate threat, the long-term decarbonization and energy transition poses a structural challenge to the fossil fuel industry. The global push towards net zero emissions could impact asset values long-term. Noble is exploring new areas like carbon capture and storage or CCS, but their success in these ventures, while promising, is not guaranteed. This is an incredibly capital-intensive industry. Think of it. You're not just buying a truck, you're building a floating city that costs billions to construct and maintain. So managing those high capital expenditure and maintenance costs is a constant battle that can easily strain cash flow. And offshore drilling carries inherent accidents and environmental risks, with the potential for severe financial, environmental, and reputational damage from incidents. Regulatory changes, such as stricter environmental regulations or shifts in drilling permits, can increase costs or restrict operations. And finally, while currently supply constrained, a prolonged boom could lead to new rig construction or the re-entry of older rigs, potentially creating increased competition and oversupply risk in the future. If we connect this to the bigger picture, these risks aren't unique to Noble, but are inherent to the offshore drilling industry as a whole. Understanding these risks is crucial for you to assess your personal risk tolerance before making any investment decisions.
That's a critical rundown of the challenges. Now, how does Noble stack up against its rivals in this very specialized industry? Who are their key competitors, and what truly gives Noble its competitive edge in a market where these risks are shared by everyone?
Right. In the offshore drilling space, Noble competes with a few major global players. Their key rivals include Valaris Pilot, VAL, Transocean Ltd, RG. They're particularly known for deepwater drilling. Sapem SPA, SPMMI, which offers broader energy services. Diamond Offshore Drilling, Inc., DO, and Seadrill Ltd, SDRL. It's a fairly concentrated market of large, highly specialized companies. Noble's distinct competitive advantages, though, really set it apart. First, they possess a premium asset portfolio. Their deliberate focus on high-spec, technologically advanced drill ships and jackup rigs positions them perfectly for high-value projects, especially after that Maersk Drilling acquisition. They're not just drilling, they're drilling the most complex, high-return wells. Second, and perhaps most crucially from an investor standpoint, they have a strengthened financial structure. Following past challenges, Noble has remarkably improved its balance sheet by significantly reducing debt and enhancing cash flow. This makes them far more resilient than some of their peers who might still be grappling with heavy debt loads, giving them more flexibility to navigate downturns or seize opportunities. Third, their operational efficiency and safety record is top-notch. A strong track record in safety and efficient operations builds deep client trust, which is essential for securing those lucrative long-term contracts. They also have a robust backlog, which, as we discussed, provides excellent revenue visibility, offering stability even amidst market fluctuations. And critically, their adaptation efforts are noteworthy. Their engagement in emerging areas like carbon capture and storage, or CCS, shows a proactive effort to adapt to the evolving energy landscape. Finally, they benefit from an experienced management team with deep industry knowledge, which is a crucial internal asset for navigating this complex cyclical sector.
That's a powerful set of advantages. Okay, let's peek at the charts now. What are the technical signals telling us about Noble stock? Based on the latest available data as of, say, Monday, July 27th, 2025, Korea Standard Time, what are the technicians seeing?
Okay, based on the latest data, Noble, ticker NE, is likely in a strong uptrend. It's clearly reflecting the broad recovery in the offshore drilling market. Its price could well be trading near its 52-week high, indicating robust recent performance and strong investor confidence. As an energy sector stock, it probably has a high beta, likely 1.5 or maybe even above. Think of beta like a stock's sensitivity dial. A high beta means if the broader market wiggles 1%, Noble stock tends to move, say, 1.5% in the same direction. So yeah, be prepared for a potentially more dramatic ride. Regarding moving averages, we'd expect to see the shorter-term ones, like the 20-day average price, cross above the longer-term 50-day average. This classic bullish signal is often called a golden cross, and it suggests strong, accelerating upward momentum. We'd also anticipate seeing increasing trading volume accompanying the price rise, which adds conviction to the uptrend. For support and resistance, previous highs or key moving averages would likely act as support levels on any pullbacks, while breaking 52-week highs would lead to uncharted territory for resistance. Looking at technical indicators, the RSI, Relative Strength Index, might be in the overbought territory, meaning above 70, which indicates strong short-term momentum. The MCD, Moving Average Convergence, divergence line, would likely be above its signal line and the zero line, further confirming that strong buying momentum. This raises an important point for you. While technical indicators appear strong for Noble, remember that in a cyclical industry like offshore drilling, these can shift rapidly. They are best used in conjunction with a thorough fundamental analysis, rather than in isolation.
So, bringing it all together then, what's the big takeaway for you as an investor considering Noble Corporation Pilipik? How should we summarize their position right now?
Noble Corporation Cairns is undeniably very well positioned within a strong structural recovery in the global offshore drilling market. The increasing demand for high-spec rigs and those rising day rates are significantly boosting its revenue and profitability. To summarize their position for you, the investor, their strengths lie in being a market leader with a premium asset portfolio, benefiting immensely from rising day rates and high utilization in a recovering market. All this is underpinned by their successful efforts to significantly improve their financial structure, making them more robust. Their weaknesses or risks, however, include a business model that remains highly dependent on volatile oil and gas prices, the industry's need for consistently high capital expenditure, and the long-term underlying strategic pressure from the broader energy transition. And, despite their improvements, they do carry a history of past debt burdens that, while being managed, are still a factor to consider in the long run. As for growth drivers, look to continued global energy demand, the limited supply of new rigs combined with aging ones being scrapped, their ability to continually secure high-margin, long-term contracts, and their relentless focus on operational efficiency. These are the engines that will drive future performance. For you, the investor, the key is to continually monitor oil and natural gas price trends, as this is their core driver. Also, pay close attention to changes in offshore drilling day rates and rig utilization, as these directly impact their profitability. Keep an eye on new contract wins and backlog growth, critical for future revenue visibility. Track their financial health, especially debt levels and cash flow generation, to ensure stable operations and investment capacity. And finally, assess the management's long-term strategy, how they plan to adapt and evolve the business in the face of that broader energy transition. Currently, the industry cycle appears to be incredibly favorable for Noble, and technical analysis might show strong buy signals. However, the inherent volatility of the energy sector and the long-term decarbonization pressure are risks that cannot be ignored. Understanding this cycle and implementing conservative risk management are essential for any investment in this space.
All right, we've thoroughly unpacked Noble Corporation Prillik today, from their core business and financial health to the market dynamics and key risks. And here's where we leave you with a thought for deeper exploration. As you analyze Noble's current strong position within this powerful cyclical upswing in offshore drilling, consider how you personally balance the immediate, compelling investment opportunities presented by a recovering sector against the long-term, accelerating global shift towards a carbon-neutral future. Where does a company like Noble ultimately fit in that evolving energy landscape over the next decade? It's a fascinating question for any investor. We hope this deep dive into Noble Corporation Plick has been helpful in navigating the complexities of this investment. If this was helpful, please subscribe.